Welcome back. Two forces are about to collide, and XRP is sitting right in the middle. On one side, the United States government just officially told the world that XRP is a legitimate financial asset like gold, like oil, like Bitcoin. The agency that regulates Wall Street, the SEC, officially put that in writing on March 17th. On the other side, the people who control American money are frozen by a global oil shock. The price of XRP is trapped, but it will not be trapped for long. So let's break it all down. For 5 years, regular people holding this asset lived in fear. They worried the government would ban it entirely. They worried exchanges would delete it. That nightmare is officially over. Two massive government agencies made a joint ruling. They declared that this token is a digital commodity. This gives the asset a completely clean legal slate. It is the ultimate green light for the traditional financial system, and the massive financial companies are wasting absolutely no time. The company behind the token just joined a major government initiative in Asia. They are working inside a sandbox managed by the Central Bank of Singapore. They are testing a new digital dollar called RLUSD. They want to use this digital dollar to fix global trade. Right now, when companies ship goods across the ocean, the payment process is a disaster. It relies on massive stacks of paper and manual checks. It takes weeks for the money to actually move. They are testing a system where the payment releases automatically the second a ship verifies its cargo. This could completely change global shipping, and it all runs on the underlying ledger technology. At the exact same time, a traditional finance giant made its move. MasterCard announced a massive new blockchain payment program. They selected 85 different partners from the crypto industry. The company behind XRP is one of those key partners. The goal is to make cross-border payments faster and cheaper using blockchain rails. The institutional foundation is literally being poured right in front of our eyes. But before you react to that, let me show you what the blockchain data actually reveals. The data is stacking up in a way I haven't seen before. Wall Street is quietly accumulating the supply. They are using exchange-traded funds, ETFs, basically a way for regular investors to buy XRP through their normal brokerage account. These funds have been an absolute magnet for institutional capital. They have pulled in $1.44 billion in total inflows. $1.44 billion, that is more than the entire gross domestic product of some small island nations. The money is flowing in every single day. Just yesterday, the Bitwise fund saw a massive single-day inflow. Investors poured $1.4 million into that specific fund in just 24 hours, and the actual usage of the network is exploding too. The network just crossed $1 billion in tokenized commodities. This means people are taking real-world assets like gold and oil and putting digital versions of them on the ledger. The network is doing the exact job it was built to do. Everything I've shown you so far points up. Now let me show you what's pulling it down. I need to give you the full picture because I refuse to oversimplify this. Despite all of this massive institutional buying, the price is bleeding out. The price of the token is down 43% since the start of the year. Down 43%, that means if you put in $1,000 on January 1st, you would have just $570 left today. Because the price is dropping, the total value held in those big funds is shrinking. It dropped from a peak of $1.65 billion down to roughly $1 billion today. The retail buyers are completely exhausted. They see the perfect news, they look at the red chart, and they give up. They are selling their bags at a major loss and walking away from the market. If you take nothing else from the last 5 minutes, remember this. The big money is buying the foundation while the small money is selling out of pure frustration. Let's zoom out. There's a reason these positives haven't moved the price. Stop. Rewind everything I just said, because there's a force powerful enough to override all of it. The Federal Reserve, the people who control interest rates in America. They dictate exactly how much it costs to borrow money. When they make money cheap, people take risks and buy crypto. When they make money expensive, people sell crypto and hide in cash. On March 18th, they made a massive decision. They voted to keep interest rates exactly where they are. They refused to cut. The receipts are in, and they're significant. Wholesale prices, the prices businesses pay before you see them in stores, jumped much faster than economists predicted. The government officially raised their inflation expectations for the entire year to 2.7%. That means they know the cost of living is going up, and the reason why is entirely out of their control. A massive conflict is escalating in the Middle East. It has effectively paralyzed the Strait of Hormuz. That is a critical waterway in the Persian Gulf. Roughly 20% of the entire global oil supply travels through that one narrow stretch of water. Because the water is not safe, energy prices are absolutely skyrocketing. The price of gas and diesel is up over 30% in a single month. When oil gets more expensive, literally everything else gets more expensive. It costs more to grow food. It costs more to deliver packages. The central bank is watching this oil shock, and they are terrified. They cannot cut interest rates while inflation is climbing. This keeps money expensive. This starves the entire crypto market of the fresh capital it desperately needs to grow. All of this fundamental progress is real. The legal clarity is real. The government partnerships are real. The massive fund inflows are real. And yet XRP is trading at $1.40. Fundamentals set the destination. Macro sets the timing. Now let us look at the actual mechanics of the supply. The big players are buying. Ashish Birla, the chief executive at a treasury firm called Evernorth, confirmed his firm is aggressively accumulating the token. They are placing massive bets on this specific asset. But there is a mechanical force fighting against that buying pressure. Okay, here's the part where I might lose some of you, but I'd rather lose viewers than mislead them. These numbers are the reason I can't go full bull today. The company that created the token still holds billions of them in a locked escrow account. Every single month, a massive chunk of those tokens unlocks. Even though they lock most of it back up, millions of dollars worth of new tokens still enter the circulating supply. This creates a constant headwind. It means you need millions of dollars in new buying every single month just to keep the price exactly where it is. Think of these levels as ceilings. Each one has billions pressing down. The first brutal ceiling sits exactly at $1.50. Every single time the price rallies to that line, exhausted holders rush to sell. They just want to break even and get out. If the bulls can somehow shatter that first ceiling, the next one waits at $1.75. That is the exact level where the institutional algorithms are programmed to take profits. Breaking through these ceilings requires a massive, violent wave of new money. Okay, you've just absorbed more real data in 15 minutes than most XRP channels give you in a month. Now let's turn it into something you can actually use. Here's where we turn analysis into action. 4 signals, that's all you need. Signal 1 is the March 27th deadline. The agency that regulates Wall Street has a hard legal deadline to issue a final decision on the next wave of spot funds. Watch their website for the official filings. Signal 2 is the Clarity Act. This is a massive bill moving through Washington to regulate stablecoins. The odds of this bill passing in April just hit 72%. If it passes, it validates the entire digital dollar strategy being built in Singapore. Signal 3 is the global price of crude oil. You do not need a degree in economics. Just pull up a chart of crude oil. If the price of oil starts dropping, inflation drops with it. That gives the central bank the green light to finally cut interest rates. Signal 4 is a clean daily candle close above $1.50. It cannot just spike up for 5 minutes and crash. It has to close the day strongly above that line. If these dominoes fall in order, the bullish scenario takes full control. Market analysts predict a rapid surge to test the $2 mark. The fundamental foundation is entirely built. It just needs the macro storm to clear. But if oil keeps ripping higher and the central bank panics, the bearish scenario is unavoidable. If they hint at raising interest rates, the price will easily bleed back down to $1.20. You don't need to guess, you just need to watch these signals. So let me bring this all together. The token just won the most important legal war in the history of the industry. It is officially classified as a digital commodity. The traditional financial institutions have already bought over $1 billion worth of it. But a massive global energy crisis has paralyzed the people who control the money supply. We are caught in a brutal tug of war between perfect network growth and a terrible global economy. I'll be covering every development, the new filings, the government votes, the price action every single day on this channel. Tomorrow, the regulatory deadline hits. I'll have the numbers, I'll have the complete breakdown, don't miss it. You now have the framework, the signals will do the rest. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.